Welcome, everyone. And I'm so happy to be here today, if not in person, remotely, which has allowed me to only dress from the top up. So I'm happy to be here today. So thank you for including me. And so what is real time? If I ask my kids, they say fast right away. I think of immediate as in terms of immediate settlements for payments, but regardless of what your initial reaction is to real time, the fundamental principle is around speed. And speed, whether it's how you are dealing with your trading partners, your internal processes within your business, or for your payments, is becoming the fundamental currency, if you will, of how we want to transact and do business in the world to come. And so if we think about real-time payments, we really haven't had a lot of exciting payment activity over the course of the past, decade or so, 20 plus years. But recently, in the past 2 years, we've had a lot of different change within payments. And the introduction of a net new payment rail, which is certainly a unique opportunity for all of us to take advantage of speed. And so for real-time payments, 24/7, 365, it creates a tremendous amount of opportunities to apply use cases in ways that you never thought were really possible. And then the introduction of request for payments will give the ability to even reach into the consumers, even though real-time payments is a credit-only environment, the opportunity to debit as a result of the request for payment, I think can be a powerful, powerful tool in the retail space in particular for collection type activity. Real-time payments is meant to be super efficient. Data is king. Data is almost an asset, if you will, when it comes to reconciling payments. And real-time payments is it does not shy away from that they're including the ISO formatted of information to be able to reconcile them and have immediate certainty of the payments that are coming. And the benefits of real-time payments are tremendous. And we see them ourselves. We have the ability to have real-time access if we are cashing out from one of our wallets, and our customers and business customers can pay immediately, really shortening, their own cost of capital as well as helping their vendors do business. If we think of how real-time payments works, it's essentially the same process that have been in place for payments for many, many years, just leveraging a new network. You have somebody that initiates a real-time payments using a variety of multitude of open platform capabilities from an integration perspective. You have an originating bank, the ODFIs, they're always in the middle of these financial transactions and sending them into the RTP network for processing. You then on the other side have a receiving bank. We've had those forever in the course of the payment history. You have somebody that originates, somebody sends. So a lot of the basic tenets of real-time payments are fundamentally existing within our infrastructure and environment for payments today. It's just the immediacy and speed that becomes the true differentiator from that particular payment type. When we first thought about real-time payments, there was a number of use cases that we brainstormed around in terms of, making purchases more quickly, in terms of processing business payments and proprietary payments more quickly, leveraging the ability to have payouts from an insurance company to immediately give reimbursement for an incident or transaction that you've had. The use cases for real-time payments truly are endless. We have, however, only hit the tip of the iceberg. If you look at the number of transactions actually going through the network today, us as individuals and consumers is the lion's share of that activity, with the me-to-me payments and wallet cash outs is the predominant use case available in the market today. We see a number of test transactions that are going through and some consumer finance application for real-time payments, but we have not yet really started to see the driver that real-time payments is going to be in the market and the adoption that we certainly expect. There's been this little thing called the pandemic, which certainly has presented some challenges from the adoption for real-time payments. But I think as we settle into the new norm from a business perspective, we're going to start to see the adoption of the real-time payment types really take off. if we think of that adoption, beyond the, pandemic settling down and life getting to whatever the new normal is going to look like, some things that will truly help the adoption is the request for payment, which will allow access to this from the consumer perspective and for a bill pay environment. I think we're going to see some industry leaders really start to drive use cases and connectivity among different networks. The increase in limits we've already seen be taken advantage of from the originators in the particular segments that are live and transacting. And then Fed has come out with their own complementary rail, because I will say each payment type, ACH, wires, they all have two different systems that can process them. Real-time payments should be no different. And so I think the Fed option will create opportunities to create that ubiquity from a faster payments perspective, and real-time in particular, that to some extent we're missing today. When we talk about real-time capabilities, I think it's important to think of how we actually are going to be integrating. One of the things that we think of and see with our customers, it's not one size fits all. It's like any payment type that we actually leverage and do business with today. We want to ensure that you can connect to us any way that you want to. And so it is very interesting to me that obviously, even though we have opportunities via APIs, application program interfaces to connect to us, online capabilities to initiate one-off, we still have a large segment of our business customers that we need to batch these transactions. We're not quite ready from a real-time payment perspective to be implementing with the APIs. We don't have our own internal capabilities. We haven't gone to cloud computing. So one of the things that I think is incredibly important as we look to drive adoption and ubiquity in real-time payments is we have to be able to offer it through the same exact channels that we offer the more traditional payment types, because we're seeing that customer demand across the spectrum of different capabilities for payment. And now it is kind of interesting via that batch versus API. I do think you lose some of the real-time capabilities and real-time benefits, but you still can be effective in a batch environment initiating real-time payments. You still have the fraud limits that are in place. The transactions are irrevocable. We really haven't seen any particular fraud losses as a result of real-time payments. So we have a lot of capabilities with the mitigating controls to really allow the batch transmissions to be just as effective as the API from that particular perspective and point of view. I do think from a future in payments perspective, we are going to see a lot with respect to what is the consumer experience and expectation. It's kind of like when you send somebody a text message and you see those dots and they're typing something and you're waiting with bated breath to see what actually is going to come back. Payments are going to become that perspective where it becomes a real-time communication between trading partners. Hey, yeah, I made that payment so you can release my next shipment, or you can actually carry the goods into my restaurant as an example to be able to satisfy the particular requirement. We're going to see, the advent of our mobile technology and devices with the speed of payment really can combine to be powerful allies, if you will, as we create more opportunities from the payment space. I think that one of the things that we've seen from a pandemic is that businesses across the shape and size have truly seen the need to have electronic payments, because you certainly can't be, if your office is closed, you can't be going into your office to get the invoices to pay or stroking checks, if you will, from that payment perspective, if you don't have the individual in the office to sign them. So we've seen a tremendous boost in the migration to electronic payments, and the need for BCP processing. And I think real-time payments will start to become part of that story as we evolve and continue to migrate more and more into electronic. From a business perspective, even though the primary use case we're seeing today is me-to-me, there's a tremendous amount of opportunity with respect to businesses in terms of increasing your cash flow. We've had some of our customers really try to differentiate themselves by paying their vendors or their artists, in a very speedy and efficient manner. The reconciliation capabilities that is enabled by the ISO format and the rich, robust remittance information can really help streamline your back-end processes. And mentioning again, migration to electronic becomes incredibly key to create efficiencies and cost savings within your organization. Now, I couldn't necessarily talk about the real-time payments and real-time and speed without giving some indication of the landscape of faster payment options that's available. One of the things that we see, even though there's a tremendous amount of benefit for real-time payments, not everything is one size fits all. If you have no ability to do batch capability or API capabilities, real-time might not give you the benefit that you need. And so, or you might not have all of your trading partners be able to accept them. And so what we've seen is that while the migration to electronic payments continues, it continues across all the different spectrums that are available. So same-day ACH and real-time payments are in kind of a knockdown, drag-out fight with respect to the limits that they have and the timing and the expansion of windows with respect to the processing for same-day ACH. We're seeing both of them rise in terms of the level of the lake and from a processing and adoption perspective. And I think we'll continue to see that happen because ultimately, they are serving the same business need and capabilities within the market. It changes from an irrevocability perspective in terms of, is that valuable to you? The other faster payment types are disbursements with Zelle, push to card, that we also see greater adoption from. And one of the things that's interesting to note is that adoption really tends to go along industry lines. A lot of the fintechs are looking towards same-day ACH and real-time payments as ways to differentiate themselves. Higher ed, for example, is a tremendous supporter of the disbursements with Zelle because they have a tremendous amount of student populations to pay, and mobile payments are really one of the ways that they're looking to get paid. And then push to card has incredible lift within the insurance space because we're able to get those funds in the hands of individuals for the reimbursement of transactions that are taking place. And so there is a lot of applicability within the market, but as you can see, each one of these faster payment types has relevance and business benefit depending on what the specific customer need is. And so I'd start to give across the faster payment spectrum some visibility into the use cases that we see and some of the adoption, and tying it to, at least from our perspective, what we've seen some of the adoption and use cases be. So within B2B, paying vendors from a B2B perspective, we have seen a lot of, some individuals want to do faster payments because it's just perceived as being cool or sexy, if you will. But ACH serves a business need in this very cost-effective way and to reach ubiquity from a market perspective. So it also becomes a viable option. Another B2C examples, in particular in this, challenging environment, I would say, from an employment perspective. In California, there are laws you have to pay that person if you part ways with them from a business perspective that particular day. You create some opportunities to use real-time payments or push to card as an ability to get those funds to that individual on that particular day and for that individual. We're also going to really see the request for payment start to drive capabilities and adoption within the faster payment segment that we are going to see and hear and understand, what might be at play for those particular B2C and C2B use cases. I do want to stop and talk about industry trends and what we're seeing come forward, because I think that a lot of what's happening with respect to the rulemaking and the connectivity that's happening, we're going to see a lot more advances, if you will, with respect to the technology. And so, for example, tokenization, which essentially some of the me-to-me payment types have already solved for, we're going to start to see try to go into the business-to-business payments. And so tokens, which are essentially led by the card environment with Apple Pay as an example, becomes a secure way to process payments to individuals. And we're seeing the TCH with real-time payments really look into what tokenization could be for their particular payment type as a way to more securely offer payments. And then, not to be left behind, Nacha is continuing their discussions on tokenization and how do we take down barriers to really make payments really safe and effective for all those that are making. From a network connectivity perspective, I will quote myself myself that I one time said to somebody, I don't know what the world is thinking to create two faster real-time payment systems, one based on token and one based on DDA. Well, my words could not be truer, because now we're actually, and that was, I think 3 or 4 years ago that I made that statement to somebody. And I was actually at a TCH meeting in New York at the time, but I think they're seeing that connectivity and need for connectivity, and there's work being done to create points of working together between the Zelle and real-time payments to be able to leverage tokenization in a real-time, safe, secure, irrevocable way. And then, I did mention a little bit earlier, and I call it the tale of two payment types. It's really fascinating to see the adoption that we have from a real-time payment perspective and how it's actually influencing ACH and wire. We're tracking closely from a bank perspective what the variance is. And what we're really seeing is that the volume of payments is only increasing. The dollar value is decreasing because we're making more smaller dollar payments in that real-time environment. And so as I think about Finovate and the spirit of the conference that you're all at today, I think, when I was asked what FinTech is, I really think it's an evolutionary and revolutionary start to the way that we do business. I think it originally was viewed more as disruptive, but I think that FinTechs really create power and opportunities that didn't exist. And it gives us all the ability to innovate where we may not have been innovative before. And we don't all have to create the same capabilities. We can leverage bits and bytes from our FinTech partners to make all of our processes more efficient and cost effective as we adopt payments and go into this new realm of payment innovation. And it's a realm like we've never seen before. And really what I see next is a tremendous amount of partnership, not only amongst FinTech and traditional banks like Wells Fargo, but I also think it's going to happen across all the different payment rails. And my hope and goal that we would truly get to a point of interoperability where we can truly be successful and solve business needs for our customers without any disruption to their practices. And so with that, Louise, I'll turn it over to you and open up for any questions.
Thank you so much, Michelle. So we're going to see what questions we've come in for you. But in the interim, whilst I'm chasing those questions up, you mentioned a really interesting point there about interoperability. Where are you betting Wells Fargo's innovation dollars on that question of interoperability? What future would you like to see?
I think from my perspective, I think one, we need to really look across the different networks and figure out what our customers need. The customer is the center of everything that we do, and understanding how we can innovate with artificial intelligence and using data as an asset will really help us get to the point that we can understand how we can differentiate, if you will, from a Wells Fargo perspective and really embed those capabilities within our payments. I think true interoperability can only come from the payment networks coming together in some way, shape, or form, whether it's standardized directories, tokenization, leveraging the same rails, using each other as BCP as an example. I think we can create a lot of it. I'm not sure that that's all going to happen within my lifetime, but I think, the innovation that we have to be able to advance in the technology and the rapid pace of technology, I think opens up that possibility in the next 10 years, much greater than we've seen it in the past.
Well, I think you're a mere slip of a girl, Michelle, and I think much is going to happen in your lifetime. So I think that was a very, very interesting answer to interoperability, and it makes it very clear that the innovation opportunity is yours to seize as you straddle that interoperability as it comes together. A final question for you, and it's very unfair, so it's quite tough. What is the biggest challenge for real-time payments? There are a few. You've laid that out very nicely. If you had to just pick a favorite problem, what would you describe that problem to be?
All right, well, I'm going to pick three biggest challenges, if I can do that. I think ubiquity is one of the biggest challenges because it creates a disparate business practice when you cannot settle all the payments you want to initiate via real-time payments and know that they're going to be received. So I think the ubiquity adoption, to me, is the number one challenge that creates issues, for some individuals with their banks if they are not able to receive those particular items. I think that the pandemic is another biggest challenge with respect to real-time payments, because it really, stopped people in their tracks in terms of what their true business priorities are. And you certainly can't think about implementing real-time payments if you're trying to figure out how you get your vendors paid via check. And so I think that while the larger, sophisticated fintech-minded companies have already thought through that, there is a tremendous amount of small and middle-sized businesses out there that truly need to evolve from a payment perspective to really make adoption of real-time payments much broader. And I think the technology, the ERP systems have to be able to integrate with real-time payments and include it as a payment type and easy plugins for APIs to make it more accessible in the market.
So that's a really interesting point. I'm so glad you gave yourself the chance to have 3 answers, because I want to come in on that point about ERP. Decades ago, ERP was the future. Now it feels, well, there was a long period of time where it felt much more like a straitjacket. And it was a very uncomfortable straitjacket at that. Do you feel that the ERP companies, whether it's Oracle, whether it's SAP, and others apply, have actually stopped being constraints in that way? Do you feel they've made enough of an evolution to step forward now?
My short answer is no. I think that there's still work to be done with respect to ease of ERP integration and system connectivity. I actually started off my career as a software developer and coder, implementing Oracle at more companies than I cared to imagine. And so I've seen firsthand the rigidity of the platform, and it certainly evolved since that time. But ERP integration, connectivity, upgrade continues to be a challenge we see for our customers.
Okay, well, that is exactly where I expected you to take that answer. So I'm disappointed to find I was right in still seeing it as something of a straitjacket. Now we have a couple of minutes left, and the questions are coming in thick and fast. How do you expect the push to card adoption to change or evolve in the next few years?
I actually am very bullish on push to card growth, not only from what we've seen from our internal business partners and where we're looking to go, but there's a tremendous amount of population with respect to, unbanked and having the access to a debit card. And I think the smaller business component that's out there, that I think it becomes a real use case and a benefit to those types of individuals that have that type of, plastic in their wallet, if so to speak, but aren't necessarily traditional banking customers. And so I feel like as the evolution comes from the millennials and beyond, we're going to see less of the reliance, candidly, on big banks for all of their banking needs. And those more niche products are going to fill specific needs. And as the ease of adoption continues for push to card capabilities, I think that is one of the payment types that we'll see continue to grow. And I think it may only grow within certain use cases, because I certainly don't see that you're going to ultimately make B2B or vendor payments. And so it really is more of a B2C type of approach and application. But consumers are really starting to take over, especially in this pandemic. I think we're seeing a move away from big business to small business, where I think push to card will really start to gain traction in that market.
I have to say, once again, I agree with you. So you can definitely come back, Michelle. You're a fine oracle for us here on the Future Payments track. Thank you very much for your time, and thank you for letting us pepper you with questions this evening.
All right, no, thank you for having me. I appreciate it
very much. So up next, we have a special address, no less, from Fahad Rashidi, who is founder and CEO of Abaca. So over to you, Fahad.